My name is Jacqueline Adramonia. I will be hosting the lenders training today. I do have other staff members on the call. Today we will be covering the Affordable Home Development Program. I'm going to turn this off while I'm presenting. The Affordable Home Development Program requirements, the homebuyer pre-qualification, and our program underwriting. Let me see. Thank you everyone for keeping your mics on mute during the presentation. We do have staff members that will be monitoring the chat if you have questions. So please place them in the chat. The training should probably take approximately 30 minutes. So we will have time after the training for specific questions that you may have. This is our new Homes for Houston website. Today's training, we're working mostly with the preferred lenders of one of our partners in the program, which is Oracle City Homes. So we're working with their preferred lenders, but we have invited all lenders that are interested in our affordable home development program. So this is a link that was provided in a chat to our new Homes for Houston website. So each community or developer that is participating in our training, they will have their own link and page on our homepage. So basically under where it's identified, Acres Home is the community that we're working with today. You would click on the Learn More, and then that developer's homepage will come up with additional information for home buyers to read to see if they are interested in that particular community. Also, for this community, Oracle will oversee new construction for 186 single-family homes, and that's including 117 affordable homes, and 69 of the homes will be market rate. So our program specifically works with the affordable homes. Just a brief workflow. Basically, the homes are for sale in the community. They are new construction. Again, we have the market rate, and then we have the affordable rate. This is a traditional home buyer process. So we're requesting that the home buyers seek out a 30-year fixed mortgage, that they're 120% area median income qualified, and they must complete a home buyer education certificate. There is a 4-year secondary lien placed on the home, and that stays in effect for that duration. Next, we'll go over the program requirements. Okay, so home buyers who participate in this program are agreeing to, okay, there we go. Home buyer understands that he or she is being considered for a new construction home at the affordable rate, pursuant to the home buyer's assistance under the City of Houston Affordable Home Development Program. The home buyer understands and agrees to comply with the requirements set forth in the Affordable Home Development Program guidelines, as may be amended, and the guidelines are located on our website, and also one of our staff members will place a copy of those guidelines in the chat for you. Next, the home buyer, they understand they will occupy the property as their principal residence throughout the affordability period. And the home buyer understands the affordability period begins upon the date of the loan documents and are executed and ends on the maturity date. Next, the home buyer understands that the maturity date for the forgivable loan is determined from the date of the execution of the loan documents and shall end 4 years thereafter. Lastly, the home buyer understands he or she will be responsible for maintaining homeowners' hazard and flood assurance if it's applicable upon the completion of this transaction. The homebuyer assistance from this program, it comes It comes from the developer. The city provides this subsidy to the developer. So and this is just an example of that assistance. So the lenders provide the home buyer with a pre-approval letter. And for our example, the pre-approval amount is $260,000. The market rate sales price is $300,000. The developer works individually with the home buyer's affordability gap. So we can see in this gap here, there's the affordability gap is $40,000. So there's a secondary lien placed on the home. The 4-year secondary lien tied to the home buyer's affordability gap amount. Basically, 25% is forgiven every year. And an example is, again, the one that we used before, there's a $40,000 for affordability gap. So within 25% of that is forgiven. So that's $10,000 each year that it's forgiven yearly. Secondary lien is forgiven after 4 years and no payments made on the secondary lien unless the home buyer sells or moves out of the home before the 4 years. Now we'll talk about the home buyer's qualification. The home buyer is required again to be at or under 120% of the area median income. They must complete an 8-hour home buyer education course, and that course must be facilitated by a HUD approved agency. In the chat is a link to the HUD approved agency. So basically the home buyer will put in their zip code, and then all the agencies that are participating within that zip code will come up and they can select the one of their choice to participate in. They need a pre-approval letter from the lender. The home buyer cannot be a registered sex offender. And we require them to complete an electronic application with the required documents that we are requesting for the program. Let's see. Here is just an example of our area median income for 2022. So I think HUD is, they're stating a goal of May of this year before these numbers will change. So once they change, they are posted on our website. And again, if you're registered, if you had an opportunity to go to our homepage, our website and register as a lender, when we get those updates, we'll be sure to send that out to you directly. But currently, an example of the 120% AMI, again, for one person in the household is $74,400, and so on and so forth, up until 8 people. Okay, for this program, I know if anyone has worked with our other home buyer assistance program, this is a separate program from our traditional home buyer assistance program. So we are working with the IRS Form 1040, and that's the adjusted gross income. So for us to prepare for the high volume of applications that we will be receiving, we elected to, determine income based on this method because it's a faster turnaround. So we will not be asking for, the check stubs and all that information. Our turnaround time will be between 3 to 5 days. If all of the documents we get in the first time are correct, which are not many, we can really get this turned around pretty fast. So for the tax return, we're requesting a 2022 tax return with the proof of filing. So we want the actual tax return and the transcript. We will take a 2021 tax return if it's less than 12 months old since they filed it, or the income has not increased by 10%. If it has increased, we have another option. We do income verification for those with no tax return. We require 2 internal forms that is in the homebuyer checklist packet. Our forms are located there. So we have a form called the adjusted gross income worksheet. And with that worksheet, the income tax affidavit, which requires the homebuyer to state why they're not submitting a tax return. So one scenario is they're not required by law to file a tax return. They are required, but they have not filed. And the third option, maybe they file, but it doesn't meet our program requirements, which are it's older than 12 months or their income has increased by 10% since they filed. Okay, we have our underwriter, one of our underwriters on the team that will be presenting, Larry. If you, are you there? Okay, I didn't see Larry. Can you go ahead and take over this part?
Sure.
Okay.
I'm Holly. I'm one of the underwriters for the program in large tract. Okay, so once a buyer goes under contract, we will need you to upload as soon as possible the tri-merge credit report, a 1008, and a contract. And that is primarily so that we can determine DTI as soon as possible and make sure there's, if there's any issues, we need to address that as soon as we can. And the max DTI is 45%. That is, there are no exceptions to that rule. It is a hard and fast rule. It cannot exceed 45. So once we know their DTI is good, you're gonna, when you start getting the documents that we need, the appraisal and what have you, once you have all that gathered together, you're gonna go to our portal. Let me step back one before I start that. We'll be sending out a letter once we determine, the DTI is good. You'll be getting a letter from us with an attached list of documents that we will need. Once you have all those documents, then you can go to the portal and you're just like it's pointing it out here. You go to section 1, it'll open up for you, and you're going to click item number 4, I'm sorry, you have to put in the file number, the large tract project number, I guess it is. And then the next arrow, number 3, is you're going to click I am a lender, need to submit loan documents for potential home buyer. Okay. And then you're going to put in your lender name, email, phone number. And then you'll scroll down a little bit and click on section 8, and it's named lender documents. And once you open that up, it'll show you the list of what items need to be uploaded. Once you've completed all that, then you just hit submit, and that's it. It's pretty simplified. Once all those documents have been reviewed and deemed satisfactory, one of us will issue a commitment letter. Okay. And then we have a short list of pre-closing documents that we require 3 days prior to closing. Be the homeowner's insurance binder, tax certificate, Schedule A and B, and pre-closing disclosure. We need 3 days. We need those documents 3 days before closing because how long it takes to order the wire. And that's it. Once we get the pre-closing documents, y'all can schedule closing.
Thank you, Holly.
You're welcome.
Okay, so now we're going to open up for any questions that you may have. I've seen quite a few in the chat. Did we get all the questions answered in the chat?
Hi, Jacqueline. It's Kashana over. I have a question.
Okay.
Oh, okay.
Okay, Kashana.
What's the maximum amount for the gap? I know the example showed 40,000. Is there a max that the borrower can be, I guess, to offset the market price?
Good
Like,
question.
can they be like 150,000 or 100,000 if they're a max on the contribution between the gap in between the market price and what the approval amount is?
Yes, there is a maximum amount.
Can you repeat the question for me?
Yes, I was wondering what the maximum gap amount is for the borrowers, like between the market price and the approval amount.
No, I don't. So
So we
there's not a.
received that,
Sorry, go ahead.
ma'am. No, I know the example stated that the market price was 300,000, the borrowers approved for 260, and the gap amount was 40,000. Is there a maximum amount that they're allowed?
The home buyer, no, there's not a maximum necessarily. So this is where we need to find some kind of a balance between what the developer is receiving in a form of a subsidy from the city, and then also comparing that to what your home buyer based on their AMI and their debt to income ratio, because that's what will drive that price, right?
Mhm. Correct.
So because if your 80 or 100% AMI home buyer is at a certain income given their household size, we still need to look at their debt to income ratio, and that's how we arrive at that monthly payment. And so we're kind of working backwards, right?
Okay. But I know it's okay, so let's say, like your example states, say the borrower was approved for the market price was 300 and the borrower was approved for 200,000, but they want that $300,000 house. It's 100,000, okay?
That's a bit of a gap.
Yeah.
I mean, we have to look at it in multiple terms here. As a developer, they're not receiving that kind of a subsidy to be able to reduce that price to 100 to like a whole $100,000, right? Because their subsidies are significantly less per property than that. And at the end of the day, we want to be able to make it at an affordable rate within their income and their debt to income ratios, but uh, there's only so much the developer can give.
Okay. Okay,
If
so
if I can if I can add to that, if I can add to that, Andrea, this is Jeremiah Rivera with the City of Houston. Um, so just try to speak plainly, there isn't anything written per se on the as Andrea was mentioning about a max cap, but the likelihood of someone being able to have that much of a gap of 100,000 plus and get to 45% DTI isn't likely.
okay.
Otherwise, the lender would have approved them for more money, like if we're speaking plainly, right? So there's something going on with that person at that point. That point in time, the lender didn't say offer them a $250,000 uh, mortgage amount. So it's not going to be an exact science. There's going to be some art in this. So
Mhm.
that's part of why we do the DTI check before the home buyer is able to close on a property. And if they don't get out of, if they're at like 50% DTI, for example, they may not be able to purchase that $300,000 home, but they're able to look at the other developments that we have throughout Houston and see if a home that may be a little bit cheaper fits their budget and is under their and it would be at that DTI level that gets them past that line. Does that help?
Okay. Yeah, that does. Understood. Thank you.
Thanks, Jeremiah. Yeah, to answer your question, I'm sorry, there's not a maximum amount.
Okay, thank you.
Mhm.
Now that said, we so part of the goal of this particular program was to have a variable amount of to give each developer flexibility to set stuff up. So we're speaking kind of directly towards the Acres Home with Oracle City Homes. Some developers may have put a cap. This particular development hasn't. So this is all kind of uh, like I said, it's going to be an art. Um, so we'll have to, in future developments, talk through that. So I just want to put that out there. But in general, like I said, if someone has that big of a gap, they're just not very likely to get past that 45% DTI because we are going to check that on the back end.
Thank you, Jeremiah. Okay, we have some additional questions in the chat. Okay, so I see one from Shane. Will you subordinate the second lien to allow for a refinance of the first lien?
I could answer that. Yes, you can refinance the first lien and we will resubordinate.
Thank you, Holly.
You're welcome.
Next question I see is from Thomas. If rates go down and the buyer chooses and can refinance, how is the second lien treated? Will it roll or blend, or does it terminate? Oh, same question reworded. Okay, thank you, Thomas.
Jackie, can we answer the question that Rick Clark asked about the foreign national wanting to purchase with cash?
Anybody on the contracts team know if we're accepting cash buyers?
Yeah, we don't have any requirements for their nationality if they are able to purchase the home outright with cash. There's nothing that would prohibit us from doing that as long as they meet the contract, the program guidelines. So do they fit within the 80% AMI? We just don't typically encounter folks who are that income level with the cash or the liquidity to pay for a home outright. And these are not $70,000 homes. So is this a specific situation?
Yeah, hey, Catherine, this is Rick. I'm the developer. The reason this came up is that there's a lot of people that have come to Texas from other countries that are here and have an enormous amount of cash they're sitting on looking to buy houses. There are restrictions generally. 9 times out of 10, if they're from Latin America, they can do an ITIN, something like that, loan. I come from a banking mortgage background, so I was that for 40 years. We're going to have questions about this. This is going to come up. Or if you have a foreign national that's come here that's working, that, a lot of the people have saved money. Now we're seeing a lot more equity than we've seen historically because of the amount of monies that have been that are being released and other sales and whatnot. And so there's all sorts of there's all sorts of different scenarios that are going to pop up. Now, one of the things that I was not aware of is that the 45% max DTI ratio, which is outside of the normal HUD guidelines. I mean, it is in their stated guidelines, but they'll go up to a 55 debt ratio. So we're going to have there's going to be some confusion over that as far as qualifying income-wise against what the city's max DTI is. So I'm going to have to make sure we disclose that properly on the front end. And by the way, the 4-year recapture, we were always told it was 5 years. So that's something new. That's actually a very positive change.
So the 5 years, we have 2 programs, Rick. So under the affordable home development, it's 4 years, and for our Harvey single family development, your Stella Links and those
Right.
Stella Link, those will be 5 years.
Okay, no, I was just always, every conversation I've had with everybody was always, the number was 5. So I'm happy to hear it's 4. So that's a positive thing. I'm not complaining.
That was the idea, because I think that's what we put in your LOI was 5 years. So it was a positive surprise. Let's put it that way.
Agreed.
So I do want to go back to your foreign national question though. So what you're seeing, or what you anticipate to see, is you have folks who have stockpiled cash, and would they fall within our income guidelines of 80 to 120%?
Yeah, so that's the question. What if they have zero income?
Jackie, Jackie, you don't have zero. So if they have zero income, they can't qualify for a mortgage.
But they don't need a mortgage because they paid cash.
So we're not going through a lender then. They're just
Right.
going to pay for the cash outright.
Right.
And it's not one of the homes under this program. It would just be under your regular fleet of homes.
Okay, I was just asking because that's not that's going to come up. We have a ton of people here from other countries.
Yeah. So in order for them to qualify for one of the affordable homes, we need documentation that shows what their income is.
Okay.
Oh, that's the only way we can verify that they are in fact eligible for that home.
Okay, now that I know that we can clarify.
Right.
Okay, perfect. Thank you, guys.
Good questions.
I know, sorry, this is Berenice from Oracle City Homes. I know some of the lenders had questions regarding what can be stacked on top of the, I guess the lien.
In other words, what other grants? Can you stack grants? What grants are eligible to stack? There's a number of lenders on the call that have a strong expertise in all the grant programs that are available outside of, the city of Houston, whether it be T-Shack, whatever's available.
Jackie, I
how
can
is
answer
that?
this. We can stack with any program that's not another federal program. You can do T-Shack, you can do Lyft. Those are the only ones I can think of off the top of my head. But if it's like a HAP program, you can't stack that with our program. That'd
Is
be
there
double dipping. It's
anything?
like double dipping.
Is there any way that we can get any sort of breakdown of what's eligible and what's not? Because there's also, there's all sorts of different things floating around out there I'm not familiar with. I haven't been in lending for 10 years. So I don't even have a clue what's out there, but some of these guys do. And, what I could do is, I guess, get a list of what I'm being told is available and run it past you guys to see if that'll work. Maybe that's the better way to approach it.
I think to Holly's point though is it's duplication of benefits. If you're receiving a benefit through federal dollars already, you can't have another benefit from the same funding source if it's federal funds. So that's why she said you can stack it with anything else as long as it's not federal funds.
And for as our HAP program, again, this program because of the amount of subsidy that's given to the developer, it really wasn't designed to utilize, another internal city program. There's nothing in our guidelines that say that you can't. However, our current homebuyer assistance program is looking at home buyers under 80% AMI. This program is looking at 120% AMI. So typically, we're finding that, if they're applying under this one, they are over the 80% AMI for the other programs, but that program also has limited funds, and we cannot, we cannot guarantee that you will receive those funds. It wasn't designed for a home buyer to just take advantage and, have this large subsidy from the home buyer and then, get additional from our home buyer assistance program. If you need down payment, there's definitely other down payment programs that the home buyer can seek. If we missed a question, feel free to ask it out loud. I'm checking in the chat. Catherine, you have a question?
Yes, and a comment. I think that really needs to be clarified on these new developments, because from what we've seen and what's been put out, it pretty much was targeting, and even in some of the development communications, it states X amount of homes available for 80% AFMI, X amount of homes available for 120. So from a lender perspective, for those that's at the 80% AFMI and are applying for the HAP funds, we were not under the impression that we could not use that money with the new development. So that definitely needs to, in the messaging kind of is more clear. And then also I had asked in for clarity about Kashana asked the question about the maximum gap coverage. It is important from a lender's point to know that upfront, even if it's not 100% accurate, but if 100 or if 50,000 is your max that you're going to give any given buyer, we need to know that, because if a buyer is approved at 230 and they're looking at a $300,000, your community is at 300, this is what the options are. We know right away to say that this is not going, to help in guidance with them, because when the buyer has to keep coming back and forth, that's where we lose them. And when we're trying to send files to underwriting with the anticipation that this is going to happen this way, and then when we get it, then that's a busted file. So Some things have to be defined for us so that we can help be the support arm that you all want us to be, and clarity in the marketing, because the minute you tell a client, try to help them understand, but they're reading it as such, oh, well, my income is at this level, I should be able, and they're applying for the program simultaneously, not knowing that they can't combine them, it makes it challenging out in the market.
Definitely understand. Um, and I was,
Catherine,
go ahead, Rick.
This is Rick. Look, I understand this is going to become a topic of your conversation with the buyers. Conceptually, we're looking at this on a case-by-case basis, which is going to be a little cumbersome. There's no doubt about that. But, we're going to have to make a business decision at each level. Yes, on some of the programs that are floating around out there, 80% median income is the limit. But the problem is, to get to that number, you need a lot more support from the city than what we're currently getting, which is why this is strictly an affordable project at 120% median. It's a best efforts for anything else. If we can get people at 80%, we will certainly do so. The concern I've got is that the lenders don't need to be making the decision on whether or not it's going to work for the buyer. They just need to be supplying an approval at a certain level. And we have to make the decision at that point if we can do something with it. And if it's 150,000 off, it's not going to work. But there are other ways to get them into qualifying. So I want to be creative, and this is one of the. Like I said, I come from a long mortgage background, and there's a lot of ways to look at these deals. I just want to make sure that we're looking at every consumer and putting them in the right programs with the right discounts available. Because again, if they can qualify for 220 and they can get 30,000 from XYZ non-federally funded grant, then certainly we can make something like that work. So it's a work in progress. We're going to just have to manage this on a case-by-case basis. It's going to be cumbersome. There's no doubt about that.
Hey, Rick, this is Chris Van here. I have a question. Would it be possible to maybe soft qualify these buyers that are coming in, and then we can kind of like funnel it down to the ones that?
Yeah, Chris, we'll talk about that separately. Let's
Okay.
just that's a separate issue. Okay. All right, thanks.
Hey, any more questions in the chat we didn't get to?
There's 18 lenders on this call. There's got to be some questions out there other than with a second lien, can you refinance the house? There's got to be some questions. There's got to be.
Well, if you don't want to like verbally have express your question, as you see on the slide, you can send your questions to new home buyer at houstontx.gov, and we will be sure to answer your questions. And based on some of the questions we received today and what we get via email, again, we will definitely update the FAQ on the website to answer some of these questions. So again, bookmark the website and check back regularly under the FAQs as we try to work this out. Acres Home is really going to be one of our first initial projects that we're working on with the home buyers. So again, like Rick stated, we're trying to work through this and get the home buyers that's in between that the 80 and 120% AMI to put some affordable products out there for them to purchase. So again,
one other quick question I just thought of. And I'm surprised none of the lenders thought of it, so I'm just going to say that. Did y'all talk about buy downs at all? Because look, right now we have to use fixed rate financing, which is fine. And I've talked to powers that be, and I would like to try to get some sort of exception on a 10-year ARM or something like that, just because of the nature of the market and the nature of the interest rate environment. But that being said, temporary buy downs are coming back, which are fixed rate mortgages. It's just that we're setting aside interest for 3 years. Or 2 years to offset some of the payment shock. Now they are fixed rate at, let's say, 6.5. We set the money aside. If the deal refinances, they get that money when it refinances if they don't use it. So the question is that acceptable? Because that is an alternative to doing adjustable rate financing. And it doesn't mean that they qualify for a higher amount. It just means their payment shock is less.
Can you give us more information about that? I'm actually not familiar with that. And
Yeah.
It's been a while since I've dabbled in mortgage lending too, so bear with me, Rick. But yeah, I'd like to know how that impacts us because you're right. If it softens that payment shock, especially
Right.
for those who are renting, and because that's payment shock is real from renting an apartment to managing
Absolutely.
a mortgage payment. So yeah, if you could send us some information on that, we'd love to
Yeah.
look at that as a team.
Shane, can you, I know that you guys have a defined program, or anybody's got a defined program. Could y'all forward that over to me and I'll forward it to them? Bottom line, this was a method that was used up until 2008. You look, for the last 14 years, there has not been a need for any sort of creative financing. I mean, it's been 3% for 14 years, which is part of the problem we're in right now. People are pushing back hard on rate, and we're in a different world today. So anything that we can do to lessen that shock, to y'all's point, I mean, is beneficial. So yeah, just let me know, and as I get information, I'll forward it over to Jeremiah and those guys.
We appreciate it, Rick. Thank you.
Sure thing.
Okay, that seems like all of our questions. So again, this training was recorded, and we will send this out with some of the documents that we attached in the chat if you weren't able to download those and bookmark. So we will send that information out to the attendees today. So if we don't have any further questions, and I'll give you back the last 20 minutes, nope, 10 minutes of your lunchtime, probably. Okay. Thank you very much.